Okay, my friends, how you guys doing? This is Lou one more time, bringing you a great surprise. I'm bringing you to the beach. Look at that, that's beautiful out there. It's nice, about 82 degrees, there's no humidity whatsoever, and I hope this microphone is doing its job because it is windy. Now, the topic for today is the Fed going to eliminate our mortgages? There's a lot of chat lately, especially on YouTube, a lot of videos, all these experts, financial advisors, all the talking heads, including me. But I'm the talking head because I'm on YouTube. But what I'm saying is, all these that you see lately on YouTube talking about now that Kevin Walsh have been confirmed as the Federal Reserve chairman. Now he's going to lower the interest rate to a point that's going to create more inflation. And as inflation goes up, for those of us that have a mortgage that is under 4%, basically our mortgage is going to be eliminated. But that is really misinformation. That is really wrong, because the thing is that nobody going to take and pay off your mortgage. Nobody going to waive your mortgage payment. Nobody going to eliminate your mortgage. That is not true. What they said is that because of the inflation going to go up, obviously the money that you're paying on anything, but especially mortgage, because it's a fixed payment every month, the value of the dollar gonna go down. So you're basically paying your mortgage with cheap dollars, where you can use any money that you normally would put for extra payments. Normally what you do is that you take that money and you can either put it in a savings on a high yield savings account, which I recommend anyway. I mean, if you are keeping money in the reserve for emergencies, anything like $5, $10, $15, $20,000, and I don't recommend to keep in savings more than $20,000, because at that point you can invest that money somewhere else. But if you keep some emergency fund like that, then what you do is that instead of be paying extra money for your mortgage, extra principal to lower your payments, to pay your money early, what you do is you take that money and you're gonna put it in a high yield savings account, which they normally pay from 2.5 to a little over 4%, depending on what bank you use. Most of those banks are what they call online banks, which is mainly the reason why they can afford to give you a good interest rate on your savings, because they don't have to worry about paying for buildings, employees, and all that stuff, you know. So the infrastructure is very cheap, and they can afford to pass those savings to you in a high interest rate account, instead of the regular savings account that the banks pay, I don't know, 0.01%, nothing basically. So that's why they come up with all these headlines about the Fed gonna eliminate your mortgage. No, the Fed not gonna eliminate your mortgage. You're still gonna have to pay your mortgage. It's just that if the inflation go up as a consequence of the Federal Reserve Bank lower the interest rate, then the money, the dollar is gonna lose value, and so therefore your mortgage is gonna be cheaper, in the sense that that dollar don't have as much impact, and obviously your salary, because of the inflation, going to go up and things like that. And they obviously recommend three things, which I also recommend, which is a high yield interest rate savings account, where you can put your emergency funds there, and while still sitting there that you don't use it, instead of losing value, you're going to actually hopefully keep up with the inflation, or maybe beat the inflation, depending how high is the inflation and how high is the interest rate. I got my own savings account on a high yield interest account, and mine only pay a little over 3%. Reason I don't go into the ones that pay over 4% is because most of those are accounts in online banks, and I'm an old-fashioned type of guy. I like to have it on a bank that have offices, that have branches across town. That if something happened, I would like to go in person and find out what the heck happened and what's going on, instead of dealing with people online or over the phone. But that's just me. They're very reputable online banks, like let me see, Ally is one of them, for example, that probably can pay over 4%. But it's up to you. For me, I'm just, like I said, an old-fashioned. I prefer to have it on a bank, brick and mortar bank, that I can go in person if something happens. Another thing they recommend is, if you got equity in your house, to have a home equity loan. And I have one, and it's not to use it, because if you use it, the interest rate is kind of high. But the thing is that you can use it for either emergencies, or better yet, if an opportunity presents to make an investment that you can flip that investment within a few weeks or a few months, then you have that money available immediately that you can use and take advantage of that investment. And that's the main reason why I have that home equity loan available. My account, my balance is zero, but I know I got that money there for 20 years. That is there sitting for 20 years. Anytime within 20 years, I can use it without having to apply for it or request anybody's permission. So those are two things that you need to have, that everybody recommend, but it's not because the interest rate going to go down and inflation going to go up. And let's face it, people talking about Kevin Walsh being going to be a puppet of the president and going to do whatever the president wants him to do, especially lower interest rate. But what people don't understand is that Kevin Walsh was a governor, one of the governors of the Federal Reserve Bank. I believe he was between 2006 and 2006 to 2011. He was one of the governors. And in 2008, during the crisis of 2008, actually, he was one of the few that opposed to lower interest rate the way it was done. So if we go by precedence, more likely Kevin Walsh will not do anything to lower the interest for now, contrary to what people believe. And that will go against what the President Trump wanted to do. But it's probably more likely what Kevin was going to do. Not to mention that there's 12 governors that make the Federal Reserve Bank. And the thing is that even though the chairman is the one that set the agenda, the chairman is the one that said, okay, this month we're going to discuss lower interest rate. And my opinion is that you should lower it. It takes a majority to approve that. So even if he wants to be a puppet, as people say about the president, and lower interest rate just to please the president, the fact of the matter is that he needs 6 more of the other governors to agree with him. And maybe 1 or 2, maybe 3 or 4 will agree with him immediately, but not all of them. So that's the thing right there that they have to keep in mind. There's 12 governors. Any decision has to be approved by a majority. So besides Kevin Walsh, he will need 6 more in order to approve any interest rate changes, especially to lower the interest rate. So don't be misled by those headlines about the federal government or the Federal Reserve Bank going to eliminate your mortgage. It's not going to happen. Now, I'm going to show you this beautiful area that I am. Look at that. Nothing but ocean across. Ocean across. People enjoy on a Monday afternoon. People enjoying everything that have to be over here. So I got a Navy helicopter. Let me see if I can catch it. There you go. It's back there in the background. Got a Navy helicopter close to the base here. And but anyway, that's all I got for now. I hope you enjoyed the video. I hope you enjoyed changing the routine from instead of being inside my house or in the patio, to be here at this beautiful beach for a walk. Until next time, this is Luz. Bye.